This is your technical update from the LMAX Exchange Research and Analytics Desk for Friday, May 6th, 2016. Euro dollar. So the euro has come back under some intense pressure this week after stalling out by a fresh 2016 high at 16.17. At this point, it's important to note that there's some critical resistance that the market has stalled out by in the 115 to 117 area. And so with daily studies having been overbought this week, it wasn't a surprise to see this pullback out from that region. But overall, the market still remains pressured to the top side. And although we're seeing signs of topping out, we would need to see a breakback below 112.17, that low going back to the 22nd of April, to officially take the pressure off the top side. Sterling dollar. So cable has rallied up in recent trade, take out some key resistance at 146.70, but if you look at the chart, the market hasn't been able to close above 146.70, and so inability to establish a daily close above that level has left the market back under pressure and potentially exposed to more weakness. Overall, the downside pressure here remains intact, and there's scope for additional weakness and a retest of those recent 7-year lows if the market continues to hold below 46.70 on a close basis. However, if the market does see a breakback above 146.70, this would suggest a significant base forming and potential upside and a major structural shift in the market. Dollar yen. So dollar yen has seen a bit of a bounce in recent trade, though the correction has been not that impressive thus far, and overall the pressure clearly remains on the downside. At this point, the market is looking for the next lower top ahead of a fresh downside extension towards critical psychological barriers and multi-month lows at 105, below which would expose a potential move into the 103 area. At this point, any rally should be very well capped towards the 109 to 110 area, while ultimately only back above 111.89 would compromise the current bearish outlook. Euro Swiss. So Euro Swiss continues to look quite constructive, with the market being well supported on dips down towards 108 and recently taking out some key resistance in the 110 to 110.25 area. This puts the focus on next key resistance at 110.62, above which exposes a move towards the multi-month highs at 112 further up. At this point, any setback should be very well supported ahead of 109.50 area, while again ultimately only below 108 would compromise the constructive outlook for Euro Swiss. Aussie dollar. So Aussie has seen some intense setbacks in recent trade after recently putting in a 2016 high at 78.35. This latest breakdown below 74.15 is significant, and if the market establishes a daily close below, it will open the door for fresh downside over the coming days. It is also worth noting that the 100-day moving average comes in around the 73.30 area, which could stem further depreciation for the moment. Dollar CAD. So dollar CAD is seeing the impressive formation of a base in recent trade after the market had traded down to a fresh 2016 and multi-month low at 124.61. At this point, there is room for additional correction, with the market seen breaking back above 29.90, which would officially confirm some form of a short-term base and potentially open the door for more significant gains towards the 132.20 area in the sessions ahead. Inability, however, to take out 129.90 would keep the more immediate pressure on the downside. Kiwi dollar. So Kiwi has been rolling over in recent trade, with the market taking out some key support and now looking like it wants to retest more critical support at 67.59 further down. The market stalled out just shy of the previous 2016 high this week, and so it's clear that there's a lot of strong resistance up above 70 and ahead of 71. Again, we would need to see a breakback below 67.59 to really put the pressure back on the downside. SPX 500. So the S&P 500 is showing signs of topside failure yet again above 2100, and the market could be poised for an acceleration of declines if we take out next key support at 2021 by that low from the 24th of March further down. A break below 2021 would then accelerate declines and expose a potential retest back towards the 2016 low at 1808 further down. In the interim, look for any rallies to be very well capped, with only a break back above that 2016 high at 2112 to compromise this newly adopted bearish outlook for the S&P 500. Gold. So gold has seen some minor setbacks in recent trade, though overall the market remains highly constructive and is expected to eventually break this consolidation and take out that 2015 peak at 1307 further up. A break above 1307 would then expose the next upside extension towards the 1400 area. At this point, any setbacks that we do see should be very well supported down towards the 1225 area, while ultimately only back below 1191 or 1190 would compromise the constructive outlook for gold.